Hello and welcome to this special broadcast. It is indeed a historic moment for the Indian stock markets. Hyundai, after spending 27 years in India, has decided to list on the stock exchange. It's the biggest ever IPO. Hyundai is raising over $3.3 billion from the Indian market. So what's the larger thinking behind this IPO and the trajectory that the parent company of Hyundai India sees for the market and the world as well? Joining us right now is the company leadership. Let me start with Chang, the global CEO of Hyundai, Mr. Tarun Garg, the CEO of Hyundai India, Unsoo Kim, the managing director of Hyundai India, and the senior vice president and the chief investor relations officer of Hyundai Motor Company, Mr. Zayhon. Thank you very much, gentlemen, for being with us on the program. Mr. Chang, let me begin with us. Why list on the Indian stock markets? What's the thinking?
Well, thank you for having us today. Well, we have a huge aspiration for the IPO because IPO is for our growth. That growth is with sustainability. And this is also we expecting growth to be with our investors. India market is fascinating, and we see this market is really fast growing. And that's why we put the highest strategic focus on here, which means we need a lot of investment with the importance of the proprietary prioritization of our strategies. But to drive this our investment, we need to have the leverage, the capital market as well. So that's why we set up the equity participation in the market, and we will use our full commitment. We do execute our investment based on our plan.
Right. Any thoughts on why you chose this particular timing?
Yeah, because I think we believe this is the right timing. We've been watching this market as we have been here more than 28 years. Yeah, and I think this is the right timing for building up the momentum. Yeah, because we are expanding our capacity. We build more capacity, and we are also extending our product portfolio. And the R&D investments is what we are putting out the best of our focus at this moment. And more than that, beyond mobility, we are also thinking how we can contribute for the energy sector. Well, those are the reasons why we select, and we believe this is the right timing.
Right. One question that a lot of investors are asking is, what does Hyundai India actually get from this IPO? Because this is an OFS with all the $3.3 billion in proceeds going to the parent entity. So what does Hyundai India really gain out of this?
Actually, this is a secondary offering, and the sharing out the parents' company, Hyundai Motor, the Korea. So that's why we expecting the cash, the capital, that flows into Korea. But definitely, we reinvest those the raised funds because we already committed our investment earlier this year. We talked to the local government, Tamil Nadu. And at that time, we already confirmed that the 200 billion, the Indian rupee, is already committed. And also, based on our, the future investment plan, not only just for the, the IPO raised funds, we definitely need more the capital to be injected for the growth of India.
Right. One question that I'd like to put to all of you is that we saw the stock opening in the red. Flattish opening, so to say. Was this a disappointment? How would you address this drop in the price at which the stock opened? How would you address that, Mr. Chang and Mr. Garg?
I think we see the potential, and we believe we can have the more longer-term view because, as we talked about the investment plan and our solid product lineup strategies, I think we can gain our future position more robust. So that's what we can deliver to the market. Yeah.
Right.
Maybe
as management, we'll focus on the performance, on pursuing growth, quality of growth, like what we have mentioned as our part of our strategy. Of course, the price will always be decided by the investor. But I think single-minded focus on how to take the company forward, as President and CEO Jay also mentioned, I think that is going to be the goal.
Right. Mr. Kim, how would you address investor concerns if you had to give us a sense of the long-term commitment and how you will build the brand in India now over the next 10 years? How would you do that?
our business model is built for long-term success. We have several focus areas in terms of sales. We are pursuing the quality of growth, focusing on profitability and the volume with our prominent product pipeline and healthy dealer sales network. In terms of a brand, we want to be a home brand, the most trusted brand in India, by implementing some India Connect marketing activities, various CSR initiatives. Also, we are focusing on the customer first, service number one, the driver. And then in terms of the electrification, we are developing our EV ecosystem. We are planning to launch 4 EV models, including Craft EV, for this financial year. Also, we are localized our full EV supply chain. Also, we are investing in infrastructures. And then we are focusing on the export. We are positioning HMI as a production hub for emerging market. So we have a very healthy and balanced domestic and export mix, so which give us not only profit, but also it gives a natural hedge against some market fluctuation there. We have a strong long-term strategy.
Right. When you speak about volume growth, Mr. Garg, what kind of volume growth are we expecting in FY25, FY26 and beyond?
Look, if you see the CAGR for the Indian industry, whether you take a 5-year period or a 10-year period, it has been about 5% in terms of volume. However, what is more important is how the average selling price has been going up. Like we mentioned earlier, we are pursuing that quality of growth. So volume is of course very, very important, but at the same time, the average selling price is important, the premiumization is important, because India, if you see, is at the cusp of that growth, because car penetration is low. At the same time, the per capita income is going up. People are wanting, the key buying decisions have changed from earlier only fuel efficiency or the price of the car to the design of the car, and that is where I believe Hyundai steps in. So we believe with the addition of capacity, which is almost, if you see, 30% capacity addition is happening for HMI in the next 3 years, and this is after a gap of more than 10 years. So I think this is a big moment for the growth of HMI going forward, and we believe that yes, not only in terms of volume, but the strategy of premiumization, the strategy of adding features, and then, meeting the expectation of the customers will help us to really sustain the volume as well as profitability.
But any numbers that you could give us, any percentages?
Look, future guidance is always, we resist from giving a future guidance, but we believe that we are in a position to really, grow in line with the market in terms of volume, and of course, always in terms of average selling price to continuously go up, because the product mix is continuously changing towards SUV, and the higher trim percentage is continuously going up. I'll give you an example. Higher trim percentage was 14% in 2019. Now it is 23%. Because we are adding more and more features. ADAS, we saw the highways being made, and today 8 out of 13 Hyundai models have ADAS. And the penetration has reached 29% in these models. So I think the opportunities will keep on coming. Infotainment is becoming very important. Software-defined vehicles are becoming very important. So HMC's strong prowess and R&D capabilities in these areas will help HMI to really leverage these opportunities.
Right. What would be your 10-year vision for Hyundai in India? You have 1 EV in the portfolio right now. You'll add another 4 by 2030. If I were to ask you about your vision for Hyundai India in the global scheme of things, Mr. Chang, what would that be?
Well, in terms of the production capacity that we are going to build, India should be one of the most important production the hub for us. To enable this, we also need to invest more and focusing on the R&D capability. Thus, we are setting up the production capacity increase and also R&D reinforcement. Those are the 2 main pillars that can ensure the growth. But if we especially focus on the EV, I think we believe that India is also, thanks to the government, the very strong the aspiration for the decarbonization. I think this is another the momentum that we can build together with the steady government policy, with the consistency, and also infrastructure, where we also need to invest as well. And also, I think infrastructure building together, well, those are the things. The most important, the theme strategic pillar for us as well.
Right.
So,
if I were to ask you about how many EVs, what would be the percentage of EVs in your sales by 2030, do you have any estimate in mind that you could give us?
yeah, currently, well, if you compare the market EV penetration versus your actual the performance, those are the ladders you can compare together. So if you see, okay, let's see, the market penetration is about 2%, yeah, but we are starting and we are putting the more EVs now, and up to year 2030, we are expecting about 5 EV models running in this market. We are expecting about 10%. Yeah.
Clearly, I think a lot of headroom to grow. So no exact number difficult to put, but localization is a very strong component which will help us to position these EVs well. Charging infrastructure, we are working very strongly, like I mentioned, whether it's the AC chargers, but also on the DC chargers, on the highways, because our study showed that while 85% of the customers are charging at home or office, however, they're hesitant to take the vehicles outside the city. So I think Hyundai took this as an opportunity, and we are working a lot on that area as well. So you can see the entire supply chain, whether it's cell through the LFP with the Indian partner. We are looking at drivetrain and power electronics. We are of course, the battery packs are being localized as we speak, and the charging infrastructure, and the volume which will increase with the 4 or 5 products which are going to come. So I think this will give us a 360-degree, view and a 360-degree wherewithal to really go on the EV path.
Right. One question that I'd like to ask both Mr. Garg and Mr. Kim. There is a $4 billion commitment that you've already made to the India market. This is for the next 10 years. How would you be deploying this? If you could help us understand how much of this would go towards electric vehicle development, setting up of charging infrastructure, R&D, this would be key and something that investors would want to know.
So broadly, if you see, 32,000 crores is the amount which comes in. 6,000 crores is our MOU with the Maharashtra government. This is for both phase 1 and phase 2 of the Pune plant. So phase 1 capacity will come in 170,000 in next year, and 80,000 will kick in 28. So from now till 28, about 6,000 crore, which includes, of course, not only the plant, but the upgradation, the models, etc., etc. Then with the Tamil Nadu government, in total, we have a MOU for 26,000 crore rupees, which is till 2032. It includes the electrification, it includes the new models, it includes the refurbishment of the plant, etc. So this is broadly, you can say 6,000 with Maharashtra and 26,000 with Tamil Nadu.
Right. In terms of R&D, how does the IPO change things for India as far as the R&D focus go? Mr. Kim, would you like to take that?
HMC has a strong centralized R&D hub in the Namyang in Korea. The HMC, the R&D majorly in the focusing on the new car development and then platform architecture and advanced technology. Whereas the Indian R&D center, we are focusing on in the R&D center. They are with these kind of features to meet the local taste and the design and the local specific quality enhancement. So we are expanding our Indian R&D center with some test track, bigger test track. So our R&D center will focus on the emerging market, small car development, full development.
Right. Mr. Chang, do you also believe that there will be now a roadmap to increase the R&D footprint in India?
definitely. Yeah, not only just because we are increasing the building up the capacity. I mean, the territory is another thing that we have to cover. The meaning, actually, we are doubling up our R&D capacity here, but to serve not only just for the India market, but the adjacent market as well, like emerging markets in Asia and other markets. Those are the things, expanded, responsibility that we are expecting the India R&D will grow.
Right.
Yeah.
It was good to hear when you said that Hyundai has created 250,000 jobs in India. Could you give us a sense of the next phase of job creation in the country? Any numbers?
I think this is an integral part of any company to really be a very strong part of the economic growth of India. So we are very humbled and very proud that yes, Hyundai over the past 28 years has contributed to the Indian economy. The whole world is looking at India very positively, whether it is the GDP growth, whether it is the per capita income, and we believe that the kind of capacity additions we are having, the kind of infrastructure which is being made, the kind of dealer network and the supplier network that we have, I think the opportunities will keep on coming, and we will be very, very happy to really be a part of this growth story of India.
All right, my final set of questions, sir. It is, you have been at number 2 since 2009 in the India market. What is the one thing that you would now like to change in India or change tracks to speed up growth faster?
I think it's customer focus. I think that should be the biggest driver to be better. And that's why we truly focus on the entire customer journey map, experience point of view, how we can do better from the customers' buying experience and the owning experience. I think that should be the biggest thing, rather than just we chase the numbers. We really, really beloved the company by the customer. I think that should be the most important moment for us to build.
Right. Now, one question that a lot of people are asking is that Hyundai has 2 brands globally, Kia and Hyundai. What is really a differentiator? When people think about Hyundai as an investment, when they look at Kia, what really differentiates the 2 companies? What's different in the trajectories, according to you?
Well, I would say, from the brand perspectives, well, you have to see some differentiated point of view from user interface and the user experience. Well, that can be characterized from the designing and the features and others. And even for how do we deal with the customer in terms of a care program? Those are all the differentiators that we can be different. But meaning we are covering different area, also creating the synergy between 2. Those are how we are dealing with the market.
Right. Would Hyundai at some stage consider an IPO for Kia as well?
We are in a position
We have
to
of
comment
Kia.
on that.
We are not in position to say that.
Listed company, so.
All right, so they're separate entities, but you are saying that there is a strong differentiation between the brands, because often customers think that one brand will eat into the other.
But it doesn't happen if you see. You see, last 5 years, you see how the Creta has grown. Last 5 years back, we used to sell 6,000-7,000 Cretas a month. Today, we are selling 15,000 Cretas a month. So I think it is all in the mind. We have been in India for 26 plus years. We are a complete auto OEM. Our network is not only in the urban areas, but also in the rural areas. So competition was always there for 26 years. You are mentioning Kia, but competition was always there.
Right.
The big thing is, what are you doing as a company? I think we believe in really strengthening the fundamentals. Like CEO said, the customer is a big focus area, and see how we can really take care of the customer requirements going forward.
Sure.
And I think that will really take care of all the competition in itself.
When it comes to localization and bringing the prices down for customers, what is the target that you have in mind for electric vehicles? What is the level of localization?
The HMI, we have the 104 the tier 1 supplier, which is a very good competition of the local and the global supplier. Currently, we have the 80% localization. We will put all efforts to localize as possible as we can. Localization is very important for us to make our product very cost competitive, and also under the current geopolitical context, the security the supply chain is very crucial for us operation. So we will put all our effort to more the localize in India.
My final question to Mr. Chang. Today there is a lot of debate in India between hybrids, EVs, flex fuel and ICE. What do you think will work for the India market? And apart from EVs, is there any powertrain that you're considering?
Well, one of our strategic competency, the advantage is the dynamic capability, which covers from ICE, hydro, the hybrid, and also the EV. Well, those are powertrains and the power electronics. It depends on the variation, how we can do better for the customer's selection. Well, so in that sense, we be very much agile and to meet the customer's demand. I think that should be the key, to do better for the customers. Yeah.
All right. It was a pleasure talking to you. Thank you so much for taking out time for CNBC TV18. We had to ask you all these questions because this has been running in everyone's mind. And it's good to have some clarity on what the company is thinking about the future. Gentlemen, thank you very much for being with us on CNBC TV18. With that, we come to the end of this special broadcast. Thank you for watching. Goodbye.